Joining me now for a closer look at what's playing itself out in that market scene is Chantal Marx from FNB Wealth and Investments. Chantal, always a pleasure and a good afternoon to you.
Hi, yes, it certainly is a good afternoon. I think after the market opened quite conservatively this morning, we have seen a nice push higher. And Anheuser-Busch really delivering the goods today.
I must ask you before we get into AB InBev here, what are we seeing here with our resources counters? We thought that, the commodities cycle had bottomed out and the thesis was changing, but it's been, I think, a third successive day of just red screens where the miners are concerned, Chantal.
Well, the miners are still very dependent on what commodity prices are doing, and they do tend to react in line with commodity prices. Even if you pull that into the currency, the rand is weaker today, in line with the Australian dollar, in line with weaker commodity prices. So these things are interrelated. I do think that overall we have seen a bottoming of certain commodity prices, and that if you are a longer term holder, you will be rewarded for holding on to your commodity or resources stocks. But of course, there's also differences between companies that are exposed to different commodities. So we know that copper prices are pushing higher and are expected to continue to push higher. We know that platinum group metal prices have been severely depressed, and they probably won't stay around here for a very long time. But then you've got a commodity like gold that has absolutely shot the lights out and recently pulled back a little bit. So gold miners, you can argue, will react more to any weakness in that gold price than what the others will do.
Then let's talk about AB InBev there. We did see that boycott of Bud Light really eat into sales. I think it's crazy just how people are willing to maybe protest with their money and even their beer preferences, Chantal.
Yes, so that certainly hurt AB InBev over the last few reporting periods. But positively, we are seeing negative momentum lessening. And that, I think, was the main positive takeaway from this print. So even though you still have volumes negative in the US, they're less negative than they previously were. And that negativity continues to contract. So I think a lot of good to take out of this print, probably chief among it, the Bud Light volume story, but then also some really good sales growth coming through from various jurisdictions, including South Africa, where they continue to gain market share and actually saw record volumes come through in this reporting cycle.
Very interesting indeed. I must also ask you about Toyota here. That's of course the world's biggest automaker. They've posted a sharp increase in their annual profit based on hybrids. And of course we know that the EV market is still taking, just not as aggressively as we had hoped. Hybrids seem to be where the sweet spot is right now. Chantal, I'm wondering if this could be over a period of time, or if this might be a short run for Toyota, where hybrids dominate their profits.
Yes, so this is certainly a narrative that's starting to take shape, where electric vehicle growth has slowed somewhat. There's still understanding that internal combustion engines won't be a big grower longer term, and you will probably start seeing volumes contract pretty soon if they haven't started contracting already. But then in between, you have hybrid vehicles that aren't as exposed or as dependent on charging infrastructure, which is still slow to be rolled out, but they are a lot better from an environmental perspective. So it is at a bit of a sweet spot. If you ask the World Platinum Council, it's the absolute future, because this will be very positive for the platinum guys, because platinum loadings or PGM loadings in hybrid vehicles are even higher than they are in internal combustion engines. And perhaps if there's a shift away from EV, or a shift in focus, at least in the short term, away from EV to hybrid, that could be something that can sustain that really soft PGM market.
Certainly, and no complaints from our side as South Africa. Chantal, I also want to get your thoughts on commentary coming out of the PIC here with this Anglo and BHP tie-up. We know that whatever happens here, it's going to be a complex transaction. It just won't be an easy one to wrap our minds around. But we are hearing of unions getting involved here. It also is very layered from a South African perspective, isn't it?
Yes, so I do think that there are a lot of sensitivities around this specific story. And I think a lot of it has to do with the fact that BHP isn't interested in Kumba Iron or Anglo American Platinum. And there are sensitivities already. And I think that this could be viewed as a bit of an insult as well. But I don't think that investors or stakeholders should put too much emphasis on that. I think once you start splitting those businesses away from Anglo American, they can really focus on their own goals and achieving their own goals. And they don't fit into BHP's portfolio. So for BHP to make an offer and hold on to those two assets just doesn't make sense. It will receive less attention and probably less capital as well. So I think longer term, this is the best case scenario. In terms of the rest of the Anglo American business, it is not in South Africa. Most of that business is based elsewhere in the world, probably with the exception of De Beers. So I actually think it's a positive move, or you can view it as a positive move. But as you mentioned as well, those sensitivities are there. There's also political considerations to take into account. In any event, it's going to be a long slog to get this specific deal through or to get a better deal on the table.
Long slogs often lead to erosion of value, Chantal. So let's talk about that. With the complexities, might it come to a point where the deal is no longer quite worth it?
Yes, I mean, I think that long slogs make sense sometimes for the company actually making the offer, because, especially if they really want the assets. I do believe that Anglo American's copper assets are good copper assets. We know that we have a copper supply cliff looming, so they will really, really want those copper assets, and I think that they'll think it's worthwhile. BHP is a conservative allocator of capital, so I don't think that they'll chase the price a lot higher, and they will have a kind of a ceiling in mind as well. I think from an Anglo American investor perspective, I would still wait for a slightly higher offer, perhaps an offer from elsewhere. And then once you get to a place where that offer has been accepted by shareholders, because it's going to take so long, I would seriously consider then exiting the share, because from an opportunity cost perspective, you're going to be sitting in a share that's trading close to that takeout value. And it's perhaps not worthwhile to be there specifically.
Brilliant, Chantal. We'll be watching this one very keenly. I'm keen to get your stock pick, but first I'd like us to reflect on counters that have found favor with your industry peers.
We're going with Standard Bank. It's a very well-known local bank. What we have seen is all the banks, the South African banks, coming under pressure. That's partly as a result of uncertainty in the lead up to the national election, and as a result showing extremely good value. They're very well positioned for the medium term. They have significant operations in Africa, so those are growing very strongly, and the discount rates are very high. But it does look like those profits will become up to 50% of the overall group's profitability. They continue in their current growth. So you've got an African play, and I think a combination of better sentiment towards South African stocks plus better sentiment to emerging market stocks leads to significant flow into the likes of Standard Bank, and the share could appreciate quite nicely in the short to medium term.
I'm picking FirstRand, and for almost some of the opposite reasons of what Ron was saying. So they've got the highest ROE that's been nicely sustained relative to the other big four banks. They have the lowest African exposure, so all of that currency volatility and all of that risk isn't inherent in them. And in SA, they've actually been growing their lending in a conservative way, but they've been growing the most, but the growth in lending has been conservative, which means that if interest rates do come down, they benefit from all of that. And if interest rates don't come down, they've been lending to a relatively affluent base, which means the earnings are relatively sustainable. So I would say the difference between what Ron is saying and I'm saying is that the EM opportunity definitely exists with Standard Bank. I'm going for the SA quality, higher return business that if foreigners do come back, they'll definitely look at, I think, the banking sector. And these are the two big stocks there that have quite strong earnings potential over the medium term.
I'm going to pick Apple, and it's in the news, and I didn't choose it just specifically because it was in the news. I chose it, because people, sentiment towards Apple goes up and down. And I think at the moment the sentiment is a bit down. We've seen Warren Buffett sell it. We've seen, fines in the EU. You've seen chatter about this, that, and the next thing. People need to remember this is one of the five biggest companies in the world. Its merge might be smaller, but it is still quite significant. And it has got a lot of cash to pay with. It's recently announced the biggest share buyback in history. I'm not a fan of share buybacks per se, but I'll take it when they give it to me.
Yeah.
They're investing in AI. They came out, I think, about an hour or so ago with some AI development. Hadn't had a chance to explore that yet, but people still be buying those iPhones. They're still be buying those new iPads that they've got. But more importantly is that their services revenue, the Apple Pay revenue is growing. And, as an Apple user, full disclosure, I can see how they get money out of people. So I physically experience it. So when you see the share price down, and it is down this year, start to accumulate for your long-term portfolio, because the company's still going to be here and bigger in 10 years' time.
Yeah. All right, Chantal, keen to get your thoughts on those ones. Standard Bank, First Rand for divergent reasons, as well as Apple.
Yes, so I think the SA Bank and probably broader SA Inc. trade has kind of become the consensus trade in South Africa going into elections, because the valuations are really compelling. The odds of a tail risk event taking place in these elections are quite low, despite a very kind of aggressive media reporting on some of the more extreme political parties out there. So if we do get a kind of a muted election outcome, then you should see a scenario where investment in South Africa improves from a foreign investment perspective, as well as from a local investor space. And I think that the banks will really benefit from that. So I'm on board with the SA Bank story right now. I like all of the SA banks at the moment, with the exception of Capitec, that I just still think is so expensive, although it always is a little bit expensive. But I take those picks, both of those picks, for those same reasons. I'd probably be comfortable to invest in both.
And with that said, which counter are you loving this afternoon?
I am so on board with the banks that I'm going with Investec today.
Interesting.
So it's a little bit different to those other selections, in that it does have exposure to the UK as well, and that exposure to the UK results in it trading at quite a deep discount relative to the South African peers on a price to book basis. But I think that discount is too high. Another interesting thing about the Investec story is that they've got quite substantial exposure to wealth management, both locally as well as in the UK, and they've done a lot in order to reposition that business with a tie-up with Rathbones in the UK, which I think that they'll see the benefit from in the near term. So backing the banks, backing Investec today.
Brilliant. An absolute pleasure having you with us this afternoon, Chantal. Thank you so much for your time. That was your midday markets update with Chantal Marx from FNB Wealth and Investments.